Every year, hundreds of billions of dollars pour into the global humanitarian aid sector. It is a massive flow of capital, moving across borders to solve some of the world's most urgent problems. But that generosity is hitting a wall. Donors are increasingly pulling back, not because they've lost the desire to help, but because they've lost the ability to verify where their money goes. The bottleneck occurs at the operational level. Thousands of NGOs worldwide are trapped running on disconnected spreadsheets and outdated, fragmented software. When capital enters these organizations, it effectively disappears into the architecture. This creates a severe information asymmetry. The donors have the capital, but the NGOs hold all the data, and neither side has a reliable way to share it. The entire sector operates as a functional black box. HumaClub PBC is a dual-platform ecosystem built to solve this exact problem. By connecting enterprise accounting tools to a donor-facing social network, it takes the black box of philanthropy and turns it into a transparent glass structure. By digitizing and verifying the back-office operations of these NGOs, the platform aims to re-engage the capital currently lost to skepticism and return it to the global aid market. The first pillar of this ecosystem is HumaDash. This is the live beta version 1 enterprise software as a service engine designed to bring NGO accounting into the 21st century. It outfits NGO operators and finance teams with robust back-office tools. This includes AI-driven anomaly detection to prevent fraud, transparent fund tracking anchored on the blockchain, and an automated compliance system covering SEC, FINRA, and global regulatory reporting. Instead of forcing a massive organization to rip out its entire tech stack, HumaDash operates with total interoperability. It plugs directly into their existing platforms, like Salesforce, Oracle, and SAP, acting as the central verification layer without disrupting daily operations. This enterprise side operates on a standard recurring SaaS subscription model. NGOs pay per location and per license to access the suite. By solving the acute operational and reporting headaches of large-scale nonprofits, HumaDash establishes a highly predictable, sticky revenue floor for the business. All of that verified enterprise data then feeds directly into the second half of the ecosystem, HumaClub. This is the consumer-facing social network where everyday donors connect with those exact verified causes. Users can scroll through the platform, filter projects by specific niches like shelter or marine conservation, and track live operations on a global impact map, from a mangrove forest in Brazil to telemedicine outposts in the Philippines. When a user decides to fund a project, they can donate instantly. That transaction is processed and recorded with an immediate Binance Smart Chain hash, giving the donor permanent, verifiable proof of their contribution. This creates a closed-loop system. The enterprise software generates verified data, which builds trust with donors. Because the platform facilitates this discovery directly, it allows nonprofits to reach new supporters with significantly lower marketing friction than traditional donor acquisition methods. As this cycle repeats and the user base scales, it activates a secondary revenue engine. High consumer engagement across the social network allows for media monetization, targeted advertising, and premium profile upgrades. The SaaS platform secures the stable, recurring revenue, while the consumer network acts as the multiplier, converting transparency into highly monetizable engagement. Operating beneath both of these platforms is the native utility token, HumaCoin. To be clear, HumaCoin is entirely separate from the equity raise and is not offered as an investment. It functions strictly as a real-world asset settlement rail. It allows the platform to move actual humanitarian disbursements across borders with a fraction of a cent in fees. This financial summary chart details the 5-year trajectory for the business. Years 1 and 2 are modeled conservatively as the team finalizes product build-out, generating an estimated $130,000 in year 1. But as onboarding accelerates, revenue scales to a projected $56.5 million by year 5. Looking at the bottom EBITDA section, the business projects turning cash flow positive in year 3 with an 8% margin, reaching $22.4 million by year 5. To execute this timeline, HumaClub PBC is currently raising a $2.5 million seed round. This is structured as a clean post-money safe at a $25 million valuation cap. This capital secures approximately 18 months of operational runway. That timeline is dedicated to finalizing the beta software, filling out engineering and sales teams, and aggressively onboarding the first cohort of paying enterprise NGOs. Hundreds of billions of dollars are given away every year. HumaClub offers the opportunity to own the core technological infrastructure that finally makes that capital visible, verifiable, and accountable.